Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we'll take a look at the euro currency. Well, taking a look on the longer time frames, guys, on the monthly and weekly chart, and reading the expectation of the markets on the possible rate hiking, makes us think that gradually the chances on some deep retracement on the longer term charts are growing. So it seems right now that euro currency indeed could show some significant retracement, and it could reach as far as 125 area. So if you would like to know the details, I suggest you to read our analysis of the weekly monthly charts in the fundamental part of weekly research. But shortly speaking, it mostly comes from the expectation of the markets and the consequences of the possible rate hiking. And in the United States, the moment that this rate hiking is mostly priced in, for the 80% it already has been priced in the current quotes, and market doesn't expect any new rate hiking until the mid of the 2016, and that put significant adjustments in equilibrium on the forex market between the European currency and United States currency, and that really could become the reason for deep retracement. This retracement probably will not cancel the current bearish trend, and probably it will continue, because the major differences in the financial policy on the in Europe and the United States still hold. Sooner or later they again will become actual, and again will start to push markets in the downward direction. But this reestablishing of the bearish trend could be significantly postponed by the current retracement. From the technical point of view, we also see some signs of the possible retracement, that some bullish signs market starts to form. That's why we think that the chances on this upward retracement have increased compared to the last week. Meantime, on the short-term perspective, we have discussed this mostly on Friday, that on the market still exists the previous momentum of this bearish trend. This drop down was really significant, and the bearish momentum still here. That's why we think that before the upward action could start to breathe and could start developing freely to the upside, market has to fade out, has to destroy this previous bearish momentum, release this momentum, and after that market will be able to freely start to follow the new market conditions that now are starting to appearing as we stand close to the Fed Reserve meeting on next week. That being said, we expect that on the next week market first should show some deep retracement to release this existing of the rest of the bearish momentum, and after that market really could turn to the upside action. That's why our trading plan suggests first waiting for this bounce, this retracement down, and after that we will see whether we could take the long position, would we like to take the long position at all. So after that we will decide what to do. But first we should be watching for a possible starting point of this retracement and waiting how it will develop. For scalp traders, this could be opportunity for taking the short position. Initially, guys, on Friday, if you remember, we have discussed the possibility of starting the bread and butter sell trade here. But as you can see, although market has started this action, it wasn't able to lead it right to the point, to the target of this bread and butter. So mostly we have to acknowledge that this action has failed. So market just continue move high. But this doesn't mean that retracement will not happen. Probably it could take place by some other pattern, not by the jet Napoli direction. And from that purpose, we are mostly should be looking for 4-hour time frame chart. Here I have drawn the possible scenarios that could appear on the market on the next week. First of all, I would like to remind you our possible free drive pattern. But as you can see, on Friday, yesterday, the retracement here was a bit insufficient to guarantee the matching of the extension. So if you remember, we have discussed that. Just need to catch this extension, right? So if you remember, we discussed that market should probably reach the 50% support, slightly lower of this trend. In this case, the matching will be just perfect. I mean the matching of the reversal point for a 3 drive pattern, because you know that the 3 drive starts action down and the crossing of the 1618 of the first drive and 127 screen line of the second. But market has shown slightly minor, smaller retracement, and you can see that's why this is a bit some spread between the extensions. It doesn't mean that 3 drive will not work, but it just has not as perfect shape as it could. Simultaneously, as you can see, market could form, for example, the butterfly here, because weekly pivot point of the common V extends inside of the swing of the second drive. That simultaneously could become the major swing for the butterfly. So market could show, for example, retracement, minor retracement down, test the weekly pivot point, and turn to the upside again. In this case, market could form the butterfly pattern here. This is two possible scenarios. Another way how market could behave, if it will show, for example, ABCD action as the second drive. So the second drive will be not just with a single leg, but it could be compounding ABCD action here, and then will continue move high. In this case, this will be more acceptable range for this retracement, and matching will be better than it stands right now between the extensions of the first and second drive. But guys, honestly speaking, this is not really a big deal for us. What particular pattern will be formed, whether it will be butterfly or market will form the 3 drive or something of the sort. Because the targets of all these patterns, the destination points of all these patterns stands the same. All of them stands around 111 even area. And this area is very important because we'll take a look at the daily chart. You will see that this is the 50% fib resistance of the whole action to the downside. And we know that euro currency likes the 50% levels. That's why this will be some sort of the fib level and agreement with the targets that are now forming on the 4-hour time frame chart. That's why whatever pattern will form here, we need to control just two things. First of all, is that at least some pattern should be formed. We do not care what particular pattern will be formed, whether it will be 3 drive or butterfly, but reversal pattern should be formed. And market should show the reversal from the 111 even area, from the 50% level. We think that market really could start retracement down from the 111 area. The possible target of this retracement also will stand somewhere between the monthly pivot point, because we assume that market should show some deep retracement. It's 1 over 724, and take a look, 50% level, 1 over 8 even. Because we know that euro currency likes the 50% level, so that's why it's again could show the 50% retracement. This level stands on assumption that downward action will start somewhere from this area. So because as you can see, not from this top, it's 50%. This 50% is from this top, potential top. Also, probably the pivot point will coincide with the 618 support. So as a result, we suggest the market should show some 50% or 618% retracement to release the rest of the bearish momentum on the daily time frame chart. And after that, here we will turn to watching for possible bullish patterns. That's our trading plan for a coming week. This is even more interesting because it will be accompanied by the Federal Reserve and the comments from the Fed. This really could bring some more volatility on the market, and of course the reality could bring some adjustments on our analysis. So we will see what will happen. But right now, picture looks as we have just described.